So you want to trade Bitcoin, right? But you're still a little bit confused as to up or down next. You've probably listened to influencers that have called for 135k since 2021, and you're almost perplexed as to why we haven't hit these kinds of levels yet, right? Now, Bitcoin has become more and more institutionalized. So what I want to do is I want to show you a very simplistic way to kind of follow the logic, follow the money, right? Now, to start with, what I want to do is share a couple of key points in terms of where this institutional transition happened. And then if you're a complete and utter beginner, how to kind of deal with this, right? How to cope with this. So if we go back right to where I feel the transition happened, we were seeing a lot of, I suppose, developers, a lot of kind of play money, right, in this kind of region. It wasn't until we dipped back down, so this kind of area from 2018 through to around 2019, they we actually started to see kind of a bit of a pickup in terms of institutional money, right? But this isn't institutional money, smart money, as you would know it, right? This was more venture capital, angel investors. So stick with me, right? Even if you're a beginner, what I want to do is just kind of share with you a little bit of the context to actually understand how the money flows, right? Why the money flows. So as we rally on up, this was the first area where we basically had a lot of the big money buying. The price rallies up to this kind of area. And I post a post talking about well, first of all, the long out to this area. So as you can see, from down low, right? Ultimately, the first play, the first institutional money, the first institutional, like, let's push this. Then we get to a point where we have this reaccumulation stage, right? So again, understanding the money flow and why the big players work the way they work. What they're actually doing is using retail traders and retail money as exit liquidity, right? So understanding what side that the bigger players are operating on is going to be one core key step in your development, into being profitable as a trader, right? Now, once we started to see this transition happen, there are tools out there such as Elliott Wave and Wyckoff. These are a little bit more advanced, a little bit more complex. But in the grand scheme of things, what they're doing is assessing the sentiment of the masses. Right? So I don't really see these as technical analysis. I'm seeing these as almost a sentiment gauge in terms of what's going on, why, and where next. Okay. Then, as we start to rally, up to the top of the move, this is where a lot of newer retail traders tend to get suckered in kind of over and over and over again, right? So at this particular point, this is where the logic starts to set in. The sentiment from the retail is the price has gone up. It's going to keep going up. This is exciting. We can't lose. Nothing can go wrong. It's different this time. Okay. These are all the things that you hear in the echo chambers. This is what social media will kind of pump. All the news narratives will be pushing you in this kind of one dimensional, buy now, now is the best time, don't miss out, etc., etc. Okay. So once you start to grasp what's actually going on behind the scenes, right? Why are these things, happening the way that you've seen them happen? Why is it unlucky for you? You seem to buy and the price drops down, right? So what I want to do is, if I share with you, right? This was something that a lot of you guys, if you already follow me, you know me for, right? This is probably the post, I guess, that a lot of people come looking for kind of answers, right? This is where the Wyckoff methodology came in. Was the price was up high, right? And I was looking at this price saying, well, we've had the reaccumulation. We're now looking for a distribution. And the obvious level, right, this orange block here, was where the liquidity sits. Now, again, right, don't worry, don't stress if this is a bit too advanced for you at the moment, right? I'm just building up in terms of the context as to why and how, right? And then what I'll do is I'll give you kind of all of the tools that will allow you to follow the money in a very simplistic fashion. Okay. So if you look at moves like this, right, everyone was saying, well, how did you know this? Why did you know? How can the price go from 60 to 28? And it's not just a lucky guess. It's not just, hey, you know this because it's you're following the money flow. You're following the order flow. All right. So I'll touch on, so let me hide this, right? I'll touch on a couple of key things later on, right? So first things first, if we look at what the price is doing, let's look at this relatively locally, okay? So what I want to do is I want you to zoom out to a larger time frame, and I want you to understand what's actually happening, right? So let's come all the way back down to the bottom, to these lows, right? And then what I'll do, I'll come on to this again in a second, right? This is now the sequence. If you're a complete beginner, right, and you're not sure what to look for, what I want you to do, right, is to not stress too much about where you start or where you stop, right? Now, we know that there was a lot of play money over here. We know that this is where the institutional players were reaccumulating, right? And we ultimately know that this is where the big boys sold off, right? This is where your likes of Plan B, your Moon Carls, your MM Crypto, these guys were all saying, hey, we're off to $1 million, we're off to 100K, we're off to this, in next month, everyone's going to be rich. This is where the big players stepped in, right? So what I wanted to do is to think about the logic as to what's actually happened, right? At this particular point, we had a massive rejection. We failed to make a new high, and we dropped back down into the zone that the bigger players were buying at, right? Now, this is part of the reason that the $28,000 on that call I just showed you was actually there as a reaccumulation for the price to reject from and go back up to, okay? So you can see so far, the logic is pretty much, we have buyers in this region and we have sellers sitting in this region, okay? That's not that complicated to follow along, okay? Now, if I get rid of some of my drawings a second, just to make the chart a little bit cleaner, get rid of these. If it likes to click. Nearly there. There we go. I'll do away with that. So what you have to then realize is that if we had large sellers over in this situation, right? Now, again, it's not that I haven't gone to the top, it just didn't click to the top, right? So the number is less relevant for the demonstration. What we then do is we rally on back up to the same areas. Then we take liquidity out, right? So we've got strong sellers. We're going to have in this position a whole bunch of new retail buyers. And the reason that it's all retail buying is that the news is positive, social media is positive, Bitcoin's never going to drop down, Bitcoin's going to the moon, all this kind of stuff, right? But then what we do is something different to the first move, okay? We drop back down to a similar area in terms of the accumulation zone for the rise here, okay? But unlike the first move, where we get quite a powerful, aggressive move away, these moves are a little bit bland, right? They're a little bit lacking in momentum, okay? Now, again, what I wanted to do is to think about the logic as to if we've got strong buyers here, why aren't the buyers pushing the price above new all-time highs? And this is the first clue that we're not about to, rally. We're not about to go to the moon, right? All these kind of things. Now, this is, again, not very complicated in terms of following the logic. we understood where the buying happened, right? And we understood where the selling was happening. Now the sellers obviously pushed down, and the sellers were in control at this particular stage, right? Now I've talked about, again, this particular move. Do you know where the trend lines were, right? This was part and parcel back then. This was January, in terms of why the move down would actually happen the way the move down would happen, right? And this wasn't, like I said, magic. This wasn't, anything else other than just following the common sense, right? Following the logic. So as we break through this level, we have now taken liquidity, right? Now, in terms of liquidity, right, again, if you're completely new at this, kind of think of this in terms of how you'd spot why you'd find liquidity is from a position such as this. When the price shoots away, you have stop losses from the people selling, right? Regardless of retail or institutional money, you have stop losses. Okay? You're also going to have new orders in the opposing direction. That's just a given, because at this particular point, people thought, hey, we are on the way to the moon. Okay. Now, as we drop down through, we have a similar situation to the downside. The people that were buying at this point, right, were not thinking, let's exit at this point. What they were doing at this stage is thinking, let's add to my position, right? Because look, life's good, right? Now, obviously, this is where the trap for retail traders tends to happen over and over and over again. Okay. So the price drops down and we drop straight into liquidity. And then we start to rally back up. And again, retail traders will be sucking in saying, hey, let's buy the dip. We failed to make and keep a low. And then we get this extra drop. Now, at this particular point, right, what I would have liked to have seen, and this kind of comes back maybe 18 months now, in terms of what we were actually looking for, is I would have liked to have seen a much greater accumulation. Now, this is where Wyckoff schematics come in a bit more complicated, as I said earlier. So, just following the simple money flow, if we didn't have much in terms of momentum, right, the momentum carried us only back above and to these levels, right? Which means it wasn't until this region that we started to see a push up and a push away, right? Now again, look left and looking left, right? Do we spot anything obvious, right? Why is the price rejecting from this level, right, before breaking through? So now we have this as our area of interest. Okay, so just following the money flow, following what's happening. We clearly had buyers down here, but the buyers down here were not really all that strong. Which brings me into my next point. A lot of people will question, well, who's selling Bitcoin? If Bitcoin hasn't gone, up over 100K, we've yet to make a new all-time high in the last 7 months. The last all-time high was only 7% above the all-time high in 2021, right? So what you have to ask is, who's buying, who's selling? Well, if we come into the leverage funds, and this is COT data, right? This is the commitment of traders. And in theory, it's a sample size of the largest kind of institutional traders or trading enterprises within the US, right? So it's not the whole world, it's just a sample size, but it kind of gives you a good idea of the sentiment, right? So what we were seeing is 20,828 times that by 5 Bitcoin is the current open interest, is the current short, right? Short position that these guys are holding, compared to 1,980 long positions times the 5 Bitcoin, right? So as you can see, we are talking, a tenth in terms of the buys versus the sells, right? Which again brings me back to who's buying, who's selling. Okay. Now, putting all the pieces together, right? And I hope this is easy enough to follow along. If you know, are struggling with this and you know, this is still a bit too advanced for you, then I've got a few mechanical videos, right, that are kind of very much softer in terms of the liquidity and following the liquidity. And what I'll do is I'll paste them into you know, into the video right now. Okay, so let's have a look. If we follow that particular logic, right, and we keep following the path, we keep following the money, we don't really get much momentum until the break here. Now, I remember this particular break, and the issue for me with this as a situation is that when I look at this from a more technical viewpoint, we had a poor accumulation. The optimal move in a second play would have been a corrective move here back into accumulation, giving us much more strength for a bigger rally. We didn't see either of these, right? So the three options that I discussed, you know, 16, 18 months ago was a triple top scenario being the worst of the three situations. Now, the reason that I can say, hey, triple top is I'm following the money, right? We have stop losses, we have new orders, we have a situation over here that means if we come to the top of this level and we drag our line across, right, what we're actually seeing is an area right now where we've almost failed to stay above. Right? Well, we've clearly, it's not obvious, we have failed to stay above. Okay, so this brings me into the top of the range. Right now, the issue is when I look at this as a move, we have the low here as momentum for the rally. Okay, we could argue this one as well. Right, I like this one less, but it's still technically valid. Okay, now the issue is if I was to make this, say, a different color, right? If I was to make this blue, our current range on a much bigger play takes us from here to here, right? Which means externally, our range is this. Oop. You can tell how much streaming that I actually do. And I don't edit anything, right? So I do apologize for any little mishaps like this. But in the grand scheme of things, right, we have now our external high. We have our move, right? And the reason that we could say, well, actually, this, you know, this is a little bit invalid here, right, for me. And the reason for it is we failed to close below this level. Okay. So what I want to do is I want to take my logic from the top. I'm following the money, right? So what you then have to understand is that all of this move was ultimately bullish, right? But it was bullish to a point of liquidating the situation over here, right? Now, the main question that I keep asking people, which I still can't seem to find an answer for, is we've had this particular year, we've had a halving, right? It's a well-known fact that people talk about the price multiplier, and we've had 12 ETFs fueling that multiplier. So if the net inflows are colossal with a multiplier after a halving, why hasn't the price hit $100,000 or more yet, right? And again, the answer is pretty simple. It's liquidity. Okay. Now, starting from the top of this range, what I want to do is follow along the same logic. Move this out to the way. Follow on the same logic as I mentioned earlier, right? What's actually happening inside of this particular move? Let me make these a little bit bigger. Right. So inside of the move, we have the last lot of buyers in here. Right? before the push away. So every time we tap into the zone, we've rejected from the zone, right? Now, we've got buyers with new orders. We've got stops in terms of the shorts, right? However, we know the shorts are currently the leverage funds. So we now know we have sentiment from retail long, we have sentiment from institutionals short. Who do you think is defending the position, right? Who do you think is willing to sell at the premium for the retail buying? Okay, so now you have this mapped out, right? What I want to then do is follow the money, follow the logic. So we come down to our low. We come back into the range, back down low, right? At this particular point, we have a nice first pullback. Right? I will pull back here. Then what happens is that we actually take the liquidity here, right, to the downside, which means this was a move up and then this was a move down, right? We failed to make a new high and we dropped down, right? Which means my current range is all the way from here, right, with here, and technically this now being internal of the much larger range because we haven't broken through the blue lines yet, right? So you have an external range and an internal range. So internal is currently bearish at this particular point. We then move on up, drop back down, right? We fail to make a new low and we break both the prior highs, right? So now we have a bullish move at this point in time. We then drop again and we fail to make a new high. And at this point, we break the liquidity, right? Both ways to the downside. So now we have, again, the same internal range, right? From this particular high to this low. We then follow the money up and we break above the prior swing high, giving us an internal pullback, which fails at the low, right? So it fails at the high. We then come down and we break another level, right? Now, this is why for me, I said this one's a bit more, I guess, kind of invalidated, right? Because we dipped below, but failed to close below, right? So at this particular point, we still have this internal structure where we're following the money, right? Now, at this particular stage, we come up, we come down, we break the high, right? Which means you're in an uptrend. We then come back down quite aggressively and we fail to take out this low, right? Now we could argue this was the low here, right? Because this could have been a new spike or something there, and therefore it's, you know, it's a 50-50, right? Now, as we then follow the money up, what we've done again is we've broken a new high, right? The only issue at this particular stage is how aggressively did we break that high? And the answer is not really, right? Which means we've swept liquidity up here, right? Then we drop back down and we create, again, you know, pretty ugly looking double bottom type move. But this time we break through, right? And I would say that's relatively impulsively. So now we have a clear uptrend in the internal swing, okay? And there's no denying that. There's no way you can turn around and say, oh, I think this or I think that. This is following the money and following the order flow, right? So the way that I'm currently viewing this is we are in a current external swing up, right, with a potential completion on a pullback, right? Now, the big question is going to be, Do we see a move like this? Or do we see a rejection from the last areas of these swings high? Right? We're just approaching a key level going back to 2020. Right? And we've still got the strong sellers up and above, even a little bit higher, which is around $70,700. Okay. So following the money is, if you were to look at buying this, what I'd like to see is obviously, further momentum, further increase, right? But given how close we are to the top, the better, the better buy, the better entry is a break above, pull back, right? And even a break above again, right? However, if we start to see on a smaller time frame a drop from this region, right? What we got to do is question how aggressive the moves from the highs are in comparison to the moves from these lows. Okay, on a daily time frame, right? You can do this on a weekly, you could do this on a monthly, you could do this on a 4 hour, a 1 hour, or 15 minutes, right? But what you have to understand is where currently is the logic, right? Where is the liquidity? Where is the money actually sitting? Okay. Now, again, I keep saying I can go into a lot more depth in terms of Elliott, Wyckoff. We could look at volume, we could look at volume profile, we could look at the delta, we could look, deeper into the COT situation. All of these things are just reinforcing what I've covered on a basic level, right? So again, I know this is a little bit maybe more than just the complete and utter beginner level, the beginner stages, right? But this is simple to follow, mechanical logic that gives you the idea in terms of where the money is flowing and why, right? So what we have coming back to all of this as a situation, I'm trying to delete some of these drawings just to show some of the sense. Now, the last strong rejection, right, which is for me this one here, is actually key in terms of what's gone on, kind of why, right? We had this really big movement down, and therefore I want to see if the price came back. Now, with the last green candle, this one here, right, prior to the move, right? Yeah. So as you can see, this last green candle, right, was the last lot of, this is the buy before the sell. This is the last real push, right? Which means we've tapped into liquidity and we got rejected, very aggressively. So although this one here is a key level, right, this area here is a little bit more refined, right? Now what we want to do is we want to see a similar, we want to see if a similar event occurs, right, on this very, very small little candle here, right? Now, if we've broken above this little candle, right, because this was, again, quite a violent move away, right, then obviously what we want to do is we want to understand whether or not we reject from this region without even making it to this area, right? Now, if the sellers remain strong, we are likely to see a rejection from this area. Okay. Now, again, depending on the size of rejection, if at all, will depend on whether or not the sellers are likely to remain in control. If we only get a rejection down, back down to 64, for example, the chances are we're going to come back to tag this area. Right? If we don't, we have to understand that there's an awful lot of liquidity from this high right there into this low, right there to there. And the reason for that is we had obviously a lot of strong selling, a lot of stop losses above, right? And we failed to take anything back from this zone. So all we've done at the moment is we've actually taken liquidity, right, from, put the brush instead of this one, we've actually taken liquidity from this region as we see it right now. So again, we've got stop losses being triggered, right? And this is where the lack of momentum is clear, right? The lack of momentum here is based on the fact that all we're doing is not really adding to the situation. We're actually just taking stop losses from a previous swing high in terms of the short situation, right? The momentum is clear from this last red candle. So the inverse, if we go from the last green up high, we're going from last red down low. And we failed, right? We failed to retest this as a situation, right? So following the simple logic would mean we have liquidity from down below this area, right? And all of the money is currently sitting in here, right? So I would like to see a rejection from this area down and into this kind of zone, right? And ideally somewhere in between rather than down deeper, right? If we drop down below this level, then obviously I think it's a bit more troublesome because we'll probably be targeting the lower blue rather than just this, right? So in the grand scheme of things, what I'm seeing right now is I'd like to see a rejection followed by a retest, followed by a rejection into the bottom liquidity, right? I think if we come up to this one first, then the chances are we've got a potential change in the situation, right? And therefore, I think the drop will be a little bit more aggressive rather than a little bit more subtle if we were to drop from this lower region. Okay, so again, I'm going to apologize that, although this is kind of beginner level, right? If you've, like I said, not really understood a lot of what I've gone through here, go and watch some of the other videos, right? Because this was, more for that kind of beginner to intermediate. If you've already kind of played with the charts, you might have already tried Bitcoin and failed. You might have already tried trading in other instruments and failed. But I guess in the grand scheme of things, what I wanted to do was just give you the easy to follow logic as to where the money is sitting at, right? There's no magic, there's no secret sauce, there's no silver bullet. Follow the money, right? And you will understand what we're looking for next and why. All right. Thanks for watching, guys. I'll see you on the next stream.